And as we were discussing earlier, when you have sort of like peak of markets and we have all this M&A talk, does that apply to crypto land? Let's have a look and see if Leigh Travers has his finger on the pulse of M&A. One of our fan favourites here, CEO at DigitalX. Hi, Leigh, welcome back to the program. Everyone's talking about Afterpay and Square. I'd like to leave that alone. In crypto land, is this sort of activity brewing in the background as well?
Yeah, definitely. A lot of that M&A activity is coming to the crypto markets. We're probably seeing the market here on track to double M&A deals that we saw over the last 3 years. We've had a recent funding round for A16Z, which is a fund that's raised 2.2 billion, the largest ever crypto round, and that's being deployed into the markets right now. One of the largest exchanges just raised $1 billion at an $18 billion valuation. They've only been around a couple of years. So certainly there's a lot of financing M&A activity happening within this market. And from our point of view, we see the Afterpay deal as a crypto one. If you look at Square, which is the acquirer, CEO Jack Dorsey, their primary focus is Bitcoin. If you have a look at where the revenues come from, they've delivered around $2.5–3 billion in revenue from their Bitcoin activities. And to put that in context, that's like 6 times the amount of revenue that Afterpay has generated over the last year. So yeah, I think it's really being applied to both markets from an M&A perspective, but yeah, more and more convergence between the two marketplaces, which is really, really exciting.
Normally when you talk about capital raise, it's for acquisitions or CapEx. Are there various sort of reasons why we're raising capital? Because can't you just wait for your crypto price to rise and then that gets you cashed up ready for the next move?
Well, I think that's one element. How you can outcompete those is obviously with more capital. And one of the biggest drivers, in terms of our investment thesis is that institutions will enter the market over the next decade. What they do need, alongside some of that regulatory clarity, is also a lot of the infrastructure to be built out, which requires funding. So that's custodians, that's settlement agents, that is a lot of transaction execution service. There's still a lot to be built out for institutions so that it is an investable asset class for them. Well, we've seen majority of institutions that want to buy Bitcoin, for example, coming through the Grayscale Bitcoin Fund and investing anywhere from a 20% premium to a 20% discount, depending on the day that markets are offering prices, which is clearly not optimal. That infrastructure is going to be built out, and for those that are building that and owning it, they're going to certainly outcompete their peers.
So in terms of one of our favourite subjects, of course, regulatory supervision, our friends over the US SEC says crypto is a wild west that needs to be tamed. That really doesn't help when it comes to credibility in crypto space, does it?
Well, I think Wild West never helps. Certainly over in Western Australia, there's certainly cries for that over here too. But no, I think it's a case that those in those positions like to make big outlandish statements so they can get their agenda pushed through. From our perspective, market participants in Bitcoin, in blockchain, in crypto markets, we actually want to see more regulation. We've seen issues around banks not supporting, not servicing the industry because of a lack of clarity. And that's a real challenge. We've seen actually Senator Bragg pushing a Senate inquiry into digital assets, into blockchain. And that's one of the key focus areas they actually have is bringing some clarity around regulation for the Australian marketplace so that we're able to compete with the likes of the US and Asia that have led the globe today. I expect to see more regulation coming through, and really it's not something the industry is trying to hide from. We've just seen over the last month, 2 of the biggest exchanges, being Binance and FTX, have reduced the maximum amount of leverage that investors are able to take. They've reduced, or they've increased, I should say, the KYC thresholds for their users. So some of the changes that you'd expect to be seeing in a maturing marketplace are absolutely happening. And I think with more regulatory clarity, you're going to get more and more institutions coming in. And I've been speaking to some of the largest financial institutions in Australia, and they absolutely want a piece of the crypto pie in terms of that revenue, in terms of that market opportunity. With more regulation and with some standards there, they're going to enter. And I think that's really going to sort of shape the next 5 to 10 years of this marketplace as it's moved from something that was quite speculative and innovative into something that is going to command a fair chunk of the GDP of the financial services marketplace.
Yep, it's a freight train that's not stopping. I guess the only thing that's left when it comes to regulators is hopefully they are speaking to people on the ground such as you, because what's the risk that they pick the wrong winners going forward when it comes to what asset classes will be regulated, allowed to form an ETF, and on we go?
Yeah, no, it's a big risk. I mean, we saw the New York bit license come through. I think that was around 2015, 2016, and that just decimated the industry in New York for a good year or two because it was so heavy-handed in the way that came through without consultation. In Australia, we're actually seeing a Senate inquiry, as I mentioned. It seems submissions from industry, including Blockchain Australia, which is the peak industry body, and it is certainly a collaborative approach from there. ASIC as well is on the lookout for cryptocurrency scams, speaking to the industry body to understand where they're at and how, I guess, consumers can be protected. So I've actually got a fair degree of confidence that things will be regulated in a positive way. And I know that the industry is looking at potentially a safe harbour, so that while the clarity is coming on the industry, we can have protection for operators within the industry. So when the regulations are clear, licenses are available, the industry can move to quickly adopt those best practices.
And speaking of regulation, of course, reporting season is coming up. Exchanges like yourself will be reporting. What will you be looking out for between you and your competitors?
Well, we're the only listed digital asset Bitcoin company, so we're the one to watch if you're interested in Bitcoin, interested in blockchain. From us, we had a huge increase, 1,000% increase in revenue. So that profit and loss line is something that investors will be watching for us, and I'm looking pretty positively to the outlook there for the first time in a few years. I think the other area is alongside the funds management business as well as the Drawbridge RegTech business. We've actually been looking in terms of best ways we can monetize our first mover advantage and our blockchain expertise. So there's a number of really innovative funding opportunities that we've been able to get involved with. One of them is the blockchain CRC, seeing a commitment from the government of $60 million of funding for blockchain innovation, mainly around the resources industry. So yeah, really, really exciting times for us, and both from an operational and a financial perspective.
Well, we'll be keeping a beady eye on your reporting season, and no doubt we'll be speaking again soon. Thank you so much, Leigh. DigitalX, have a good day.
Thank you very much. Cheers.